Question 1. General insurance concepts. Risk management. What is the most effective method for managing pure risks in the context of casualty insurance? A. Avoidance. B. Retention. C. Transfer. D. Sharing. Answer C. Transfer. Explanation. Transfer is the most effective method for managing pure risks, particularly through insurance. In casualty insurance, the policyholder transfers the financial consequences of a potential loss to the insurance company in exchange for premiums. The insurer then bears the risk and compensates for covered losses. Avoidance means eliminating the risk entirely, which is not always feasible. Retention means the individual or business retains the risk and pays for the losses out of pocket. Sharing involves distributing the risk among a group or collective, but transfer through insurance is typically more efficient. Relevant law concept: insurance is a risk transfer mechanism where the insured shifts financial responsibility for specific risks to an insurance company in exchange for premiums according to the principle of indemnity. Question 2. Casualty insurance basics. Negligence scenario. David operates a small construction business in Vermont. While working on a client's property, one of his employees accidentally leaves a ladder unsecured, causing it to fall and damage a neighboring building. Under Vermont's casualty insurance laws, how should David's commercial general liability (CGL) policy respond? A. The CGL policy will cover the damage because it was a negligent act committed during the course of business. B. The CGL policy will not cover the damage because it only covers bodily injury, not property damage. C. The CGL policy will deny the claim because it excludes coverage for the actions of employees. D. The CGL policy will cover the damage only if David specifically added a property damage endorsement. Answer A. The CGL policy will cover the damage because it was a negligent act committed during the course of business. Explanation. A commercial general liability (CGL) policy provides coverage for property damage caused by negligence during the course of business operations. Since the damage resulted from a negligent act by an employee, it would be covered under the Coverage A. Bodily injury and property damage liabilities section of the CGL policy. CGL policies typically cover both bodily injury and property damage, provided the act was unintentional and occurred during business operations. Relevant law concept. Under Vermont's insurance regulations and general CGL policy terms, negligence leading to property damage during business operations is covered unless specifically excluded. This is fundamental to casualty insurance as it protects businesses from liability claims resulting from third-party bodily injury or property damage. Question 3. Workers' compensation insurance. Covered injuries and benefits. Which of the following injuries would typically not be covered by workers' compensation in Vermont? A. An employee slips and falls at the office, suffering a broken arm. B. An employee is injured while driving to a client meeting for work purposes. C. An employee develops a repetitive stress injury from performing work-related tasks. D. An employee is injured while commuting to work from home. Answer D. An employee is injured while commuting to work from home. Explanation. Workers' compensation typically covers injuries that occur during the course of employment, which includes accidents at the workplace or while performing work-related duties, such as driving to a client meeting. However, injuries sustained while commuting to and from work outside of business responsibilities are generally not covered. This is known as the coming and going rule, which excludes injuries that occur during a regular commute from home to work unless specific exceptions apply, e.g. traveling salespersons. Relevant law concept. Vermont's workers' compensation laws align with general principles where injuries that occur in the course and scope of employment are covered, but commuting injuries fall outside this scope unless certain conditions are met. Question 4. Personal automobile insurance. Uninsured underinsured motorist coverage. If a Vermont driver with uninsured motorist coverage is involved in an accident where the at-fault driver has no insurance, what can the insured driver expect in terms of compensation under their coverage? A. Coverage will pay for both the insured driver's bodily injury and property damage. B. Coverage will only pay for the insured driver's bodily injury. C. Coverage will pay for medical expenses and lost wages, but not vehicle damage. D. Coverage will only pay if the other driver can be proven to have acted with gross negligence. Answer B. Coverage will only pay for the insured driver's bodily injury. Explanation. Uninsured motorist coverage in Vermont compensates for bodily injury caused by a driver who has no insurance. It typically does not cover property damage unless there is a specific endorsement for uninsured motorist property damage. The purpose of coverage is to ensure the policyholder receives compensation for injuries when the at-fault driver is uninsured. Compensation for vehicle damage would require collision coverage or a specific UMPD endorsement. Relevant law concept. Under Vermont law, uninsured motorist coverage is mandatory for bodily injury, but not for property damage unless an additional endorsement is purchased. coverage ensures that drivers are protected against bodily injury caused by uninsured motorists. Question 5. Commercial general liability insurance. Policy exclusions. Which of the following scenarios would likely not be covered under a commercial general liability CGL policy in Vermont? A. A contractor accidentally damages a client's property while performing repairs. B. A business owner is sued for false advertising that causes financial harm to a competitor. C. A company faces fines for environmental pollution violations. D. To improper disposal of hazardous waste. D. A visitor slips and falls at a store, sustaining injuries. Answer: C. A company faces fines for environmental pollution violations due to improper disposal of hazardous waste. Explanation: commercial general liability CGL policies generally exclude coverage for pollution-related claims, including fines or penalties for environmental law violations. Coverage for pollution liability typically requires a separate pollution liability policy or endorsement. The other scenarios involve bodily injury or property damage that falls within the scope of a standard CGL policy. False advertising claims may be covered under the Coverage B, Personal and Advertising Injury Liabilities section of a CGL policy, while slips and falls are covered under Coverage A, Bodily Injury and Property Damage Liability. Relevant law concept. CGL policies exclude coverage for environmental or pollution-related claims, as these risks are usually handled under separate environmental or pollution liability policies. Question 6. Workers' compensation insurance, employer's obligations. In Vermont, what is an employer's obligation under workers' compensation law if an employee sustains a work-related injury that requires medical treatment? A. The employer must pay for all medical bills related to the injury, regardless of the severity. B. The employer must ensure that the employee receives medical treatment and pay for any lost wages during the recovery period. C. The employer is required to provide compensation only if the injury results in a permanent disability. D. The employer must provide medical coverage, but wage loss benefits are only paid if the employee is out of work for more than 7 days. Correct answer: D. The employer must provide medical coverage, but wage loss benefits are only paid if the employee is out of work for more than 7 days. Explanation: under Vermont workers' compensation law, employers are required to cover all reasonable and necessary medical expenses related to a work injury. Wage loss benefits, temporary total disability benefits, are payable if the employee is unable to work for more than 7 days. If the employee is out of work for more than 7 days, they may receive compensation for lost wages beginning on the 8th day of disability. Wage loss benefits do not apply to injuries that result in less than 7 days of missed work. Relevant law concept. Vermont workers' compensation law mandates that employers provide medical benefits immediately after a work-related injury, but wage loss benefits only begin after the 7th day of missed work. Question 7. Commercial auto insurance. Liability coverage. A Vermont delivery company owns a fleet of trucks and carries commercial auto insurance with liability coverage. One of the drivers causes a multi-vehicle accident resulting in significant property damage to other vehicles and bodily injury to several individuals. What will the commercial auto liability coverage typically pay for? A. The policy will pay for both the damage to the company's own trucks and the damage to third-party vehicles. B. The policy will cover all third-party bodily injury and property damage claims up to the policy limits. C. The policy will only pay for bodily injury claims but not property damage claims. D. The policy will only cover property damage and exclude bodily injury liability. Answer: B. The policy will cover all third-party bodily injury and property damage claims up to the policy limits. Explanation: commercial auto liability insurance covers third-party claims for both bodily injury and property damage caused by the insured's vehicles during the course of business operations. In the case of an accident caused by one of the company's drivers, the policy would pay for the medical expenses and property damage incurred by the other parties involved up to the policy's limits. However, damage to the company's own trucks would be covered under physical damage coverage, not liability coverage. Relevant law concept. Liability coverage under commercial auto policies in Vermont applies to third-party claims including both bodily injury and property damage caused by the insured's vehicles, but excludes coverage for damage to the insured's own property. Question 8. professional liability insurance. Errors and omissions. Which of the following would most likely be covered by an errors and omissions EO policy for a professional in Vermont? A. A customer slips and falls in a professional's office, sustaining injuries. B. A financial advisor is sued for providing inaccurate investment advice that leads to a client's financial losses. C. An accountant's office is damaged by a fire, resulting in business interruption. D. A doctor is sued for medical malpractice after surgery goes wrong. Answer: B. A financial advisor is sued for providing inaccurate investment advice that leads to a client's financial losses. Explanation: Errors and omissions EO insurance covers professionals for claims related to mistakes, negligence, or failure to perform professional duties that result in financial losses for their clients. In this case, the financial advisor provided inaccurate investment advice leading to a claim for financial damages. EO policies do not cover bodily injury, such as slip and fall claims, property damage, such as fire damage, or medical malpractice, which requires specialized malpractice insurance. Relevant law concept: EO policies in Vermont protect professionals from liability arising from errors or omissions in their professional services, specifically in cases where a client suffers financial harm due to negligent advice or mistakes. Question 9. Business Owners Policy. Business interruption coverage. A retail store in Vermont suffers extensive fire damage, forcing the business to close for several weeks. The owner has a business owner's policy (BOP) with business interruption coverage. What type of expenses can the business owner expect this coverage to pay for? A. Business interruption coverage will only cover the physical damage to the store. B. Business interruption coverage will pay for the loss of income during the period of restoration and any continuing expenses such as rent. C. Business interruption coverage will pay for future profits beyond the period of restoration. D. Business interruption coverage will not pay for loss of income but will cover additional expenses incurred during repairs. Answer: B. Business interruption coverage will pay for the loss of income during the period of restoration and any continuing expenses such as rent. Explanation: Business interruption coverage under BOP compensates for the loss of income and ongoing expenses, e.g. rent, utility bills, while the business is unable to operate due to a covered peril, such as fire. The coverage is limited to the period of restoration, which is the time it takes to repair or replace the damaged property. It does not cover future profits beyond this period or physical damage, which would be covered by property insurance. Relevant law concept: in Vermont, business interruption insurance is part of a BOP and is designed to cover the loss of income and ongoing expenses due to a temporary closure caused by a covered event, such as fire or other property damage. Question 10. Inland Marine Insurance. Property in transit. A Vermont logistics company is transporting valuable artwork for a client. If the artwork is damaged during transit, which type of insurance would provide coverage for the loss? A. Business Owners Policy (BOP). B. Commercial General Liability (CGL). C. Inland Marine Insurance. D. Umbrella Insurance. Answer: C. Inland Marine Insurance. Explanation: Inland marine insurance provides coverage for property that is in transit, such as artwork, equipment, or other goods being transported from one location to another. This type of insurance is specifically designed to cover risks that occur during the transportation of goods, making it the appropriate choice in this scenario. Question 11. Flood insurance. National Flood Insurance Program. A homeowner in Vermont lives in a designated flood zone. Which of the following is true about their options for flood insurance under the National Flood Insurance Program and FIP? A. Flood insurance is automatically included in homeowners' policies in flood-prone areas. B. Flood insurance can only be purchased through private insurers, not the NFIP. C. The NFIP offers coverage for both building and contents, but separate limits apply. D. Flood insurance is only available to commercial properties, not residential properties. Answer: C. The NFIP offers coverage for both building and contents, but separate limits apply. Explanation: The NFIP provides flood insurance to property owners in participating communities. Coverage is available for both buildings and personal property contents, but the policy will have separate limits for each. Homeowners' policies do not typically cover flood damage, so a separate NFIP policy is necessary for those in flood-prone areas. Relevant law concept: in Vermont, homeowners in flood zones can purchase flood insurance through the NFIP, which provides coverage for structural damage and personal belongings with different limits for each. Question 12. Homeowners insurance. Covered perils. Which of the following events is typically not covered under a standard Vermont homeowners insurance policy? A. Fire damage. B. Theft of personal property. C. Flood damage. D. Vandalism. Answer C. Flood damage. Explanation. Standard homeowners insurance policies do not cover flood damage. To be protected from flood risks, homeowners must purchase a separate flood insurance policy, often through the National Flood Insurance Program and FIP. The other perils listed, such as fire, theft, and vandalism, are generally covered under standard homeowners policies. Relevant law concept. Flood damage is excluded from standard homeowners insurance in Vermont and requires separate coverage. Question 13. Health insurance, ACA requirements. Under the Affordable Care Act account, what is the requirement for Vermont health insurance plans regarding pre-existing conditions? A. Plans can deny coverage based on pre-existing conditions. B. Plans can charge higher premiums based on pre-existing conditions. C. Plans must cover pre-existing conditions without charging higher premiums. D. Plans are required to offer coverage, but at higher premiums for the first year. Correct answer. C. Plans must cover pre-existing conditions without charging higher premiums. Explanation. The ACA prohibits health insurance companies from denying coverage or charging higher premiums based on pre-existing conditions. This rule applies to all ACA-compliant health plans in Vermont and nationwide. The goal is to ensure that individuals with health issues can access affordable care without being penalized. Relevant law concept. The ACA ensures that Vermont residents with pre-existing conditions are entitled to health coverage without facing discrimination in terms of cost. Question 14. Personal umbrella insurance. Liability coverage. Which of the following scenarios could trigger coverage under a Vermont personal umbrella insurance policy? A. A flood damages your basement, requiring extensive repairs. B. You are found liable in a lawsuit for a serious car accident that exceeds your auto insurance liability limits. C. A contractor is injured while working on your home and you don't have workers' compensation insurance. D. Your boat is damaged in a storm and the cost of repairs exceeds your policy limits. Answer. B. You are found liable in a lawsuit for a serious car accident that exceeds your auto insurance liability limits. Explanation. Personal umbrella insurance provides additional liability coverage above the limits of your underlying policies, such as auto or homeowners insurance. It can be triggered when you are held liable for damages that exceed the limits of your primary policies, such as in a major lawsuit after a serious car accident. Umbrella policies do not cover property damage like flood or boat repairs. A relevant law concept. In Vermont, personal umbrella policies offer protection against large liability claims that exceed the coverage limits of primary insurance policies like auto or home insurance. Question 15. Workers' compensation insurance. Benefit calculation. In Vermont, how are wage replacement benefits calculated for an employee who is temporarily unable to work due to work-related injury? A. The employee receives 100% of their average weekly wage. B. The employee receives 75% of their average weekly wage. C. The employee receives 66 to 3% of their average weekly wage. D. The employee receives a flat rate set by the state for all injured workers. Answer. C. The employee receives 66 to 3% of their average weekly wage. Explanation. Under Vermont workers' compensation law, wage replacement benefits for temporary total disability are set at 66 to 3% of the employee's average weekly wage, subject to minimum and maximum limits set by the state. These benefits are designed to partially compensate the worker for lost income while they are unable to work due to a covered injury. Relevant law concept. Vermont workers' compensation benefits include wage replacement at 66 to 3% of the injured worker's average weekly wage for temporary total disability. Question 16. Renters insurance. Personal property coverage. A Vermont tenant has renters insurance. If their personal belongings are stolen from their apartment, how does the renter's insurance typically respond? A. The policy will reimburse the tenant for the actual cash value of the stolen items. B. The policy will reimburse the tenant for the replacement cost of the stolen items. C. The policy will pay for stolen items only if the landlord was at fault. D. The policy does not cover theft. Only damage caused by perils like fire is covered. Answer. A. The policy will reimburse the tenant for the actual cash value of the stolen items. Explanation. Most renters insurance policies in Vermont provide personal property coverage on an actual cash value (SEV) basis, which means they will pay the depreciated value of the stolen items. Some policies offer replacement cost coverage, but this is typically an optional upgrade. Renters insurance covers theft regardless of whether the landlord is at fault. Relevant law concept. Renters insurance in Vermont typically provides coverage for theft of personal belongings, reimbursing the tenant based on the actual cash value of the items. Question 17. Auto insurance. Physical damage coverage. Which of the following damages would be covered under a Vermont auto insurance policy's comprehensive coverage? A. A collision with another vehicle. B. Vandalism that results in broken windows. C. Injuries sustained in an accident. D. Damage to another driver's vehicle in a crash. Answer: B. Vandalism that results in broken windows. Explanation: comprehensive coverage under an auto insurance policy in Vermont covers damage to the insured's vehicle caused by non-collision events such as vandalism, theft, natural disasters, or animal collisions. Damage caused by a collision with another vehicle would be covered under collision coverage, while injuries would fall under liability or medical payments coverage. Relevant law concept. In Vermont, comprehensive auto insurance covers non-collision events including vandalism, natural disasters, and theft. Question 18. Life insurance. Beneficiary designation. If a Vermont life insurance policyholder does not designate a beneficiary, what happens to the death benefit upon their passing? A. The death benefit is paid to the state of Vermont. B. The death benefit is distributed to the policyholder's estate. C. The death benefit is automatically divided among the policyholder's children. D. The death benefit is forfeited and the insurer retains the funds. Answer: B. The death benefit is distributed to the policyholder's estate. Explanation: if a life insurance policyholder in Vermont does not designate a beneficiary, the death benefit is paid to the policyholder's estate. The proceeds would then be distributed according to the terms of the policyholder's will, or if there is no will, through Vermont intestacy laws. Relevant law concept. In Vermont, if no beneficiary is named on a life insurance policy, the death benefit becomes part of the policyholder's estate and is distributed accordingly. Question 19. Commercial property insurance. Business personal property. A Vermont business owner has a commercial property insurance policy that includes coverage for business personal property. Which of the following items would be covered under this part of the policy? A. The building structure itself. B. The inventory stored inside the business. C. The land on which the business is located. D. Employees' personal belongings kept in the workplace. Answer: B. The inventory stored inside the business. Explanation: business personal property coverage under a commercial property insurance policy protects the contents of a business, including furniture, equipment, and inventory. The building itself is covered under a different section of the policy, building coverage, while land and employees' personal belongings are typically excluded. Question 20. Commercial auto insurance. Non-owned vehicle coverage. A Vermont business owner wants to ensure their employees are covered if they use their personal vehicles for company purposes. Which type of commercial auto insurance coverage should the business owner consider? A. Comprehensive coverage. B. Collision coverage. C. Non-owned auto liability coverage. D. Underinsured motorist coverage. Answer: C. Non-owned auto liability coverage. Explanation: non-owned auto liability coverage provides protection when employees use their personal vehicles for business purposes. If an employee is involved in an accident while driving their personal car on company business, this coverage would pay for the business's liability in the event of a lawsuit. It does not cover physical damage to the employee's vehicle. Relevant law concept. In Vermont, businesses with employees using personal vehicles for business should consider non-owned auto liability coverage to protect against potential lawsuits resulting from accidents. Question 21. Vermont workers' compensation exemptions. Which of the following groups is exempt from mandatory workers' compensation coverage in Vermont? A. Agricultural workers on small family farms. B. Employees of businesses with more than 10 workers. C. Full-time office workers. D. Part-time retail workers. Answer: A. Agricultural workers on small family farms. Explanation: in Vermont, workers' compensation insurance is generally required for all employers, but there are exemptions for certain agricultural workers, particularly those working on small family farms. However, other categories like office and retail workers must be covered if employed by a business. Relevant law concept. Vermont law mandates workers' compensation for most employees, but specific exemptions apply to small agricultural operations and other limited categories. Question 22. Homeowners insurance. Personal liability coverage. A guest slips and falls on a Vermont homeowner's icy walkway and sues for medical expenses. Which part of the homeowner's insurance policy would respond to this claim? A. Dwelling coverage. B. Personal property coverage. C. Personal liability coverage. D. Medical payments coverage. Answer C. Personal liability coverage. Explanation. Personal liability coverage under a Vermont homeowner's insurance policy protects against legal claims for bodily injury or property damage caused by the homeowner's negligence. In this case, if the homeowner is found liable for the guest's injuries, this coverage would pay for legal fees and damages awarded. Relevant law concept. Vermont homeowners insurance includes personal liability protection to cover lawsuits arising from injuries on the property due to negligence. Question 23. Vermont auto insurance. Financial responsibility laws. Under Vermont law, what is the minimum amount of bodily injury liability coverage required per person for auto insurance policies? A. $10,000. B. $25,000. C. $50,000. D. $100,000. Answer B. $25,000. Explanation. Vermont's minimum auto insurance liability requirements mandate at least $25,000 in bodily injury liability coverage per person involved in an accident. This helps cover medical expenses and other damages if the policyholder is found at fault in an accident. Relevant law concept. Vermont's financial responsibility laws require auto insurance policies to meet minimum coverage limits, including $25,000 for bodily injury per person. Question 24. Disability insurance. Short-term versus long-term. In Vermont, how does short-term disability insurance differ from long-term disability insurance in terms of benefit duration? A. Short-term disability typically provides benefits for a few months, while long-term disability can extend for years. B. Short-term disability covers up to 1 year, while long-term disability covers only 6 months. C. Short-term disability is for work-related injuries, while long-term disability is for non-work-related injuries. D. Short-term disability offers benefits only for temporary injuries, while long-term covers permanent disabilities. Answer A. Short-term disability typically provides benefits for a few months, while long-term disability can extend for years. Explanation. Short-term disability insurance generally offers coverage for a few weeks to a few months, providing income replacement for temporary disabilities. Long-term disability insurance, on the other hand, can cover several years or even until retirement age for more serious or permanent disabilities. Relevant law concept. In Vermont, short-term disability insurance is designed for temporary income loss, while long-term disability provides extended protection for prolonged or permanent conditions. Question 25. Commercial general liability insurance. Coverage types. A Vermont business faces a lawsuit after a customer trips on a loose floorboard in the store. Which part of the business's commercial general liability (CGL) policy would cover this claim? A. Premises liability coverage. B. Product liability coverage. C. Professional liability coverage. D. Equipment breakdown coverage. Answer A. Premises liability coverage. Explanation. Premises liability coverage under CGL policy covers bodily injury or property damage claims that occur on the business's physical premises. In this case, the customer's injury occurred due to the business's negligence in maintaining a safe environment, triggering premises liability coverage. Relevant law concept. Vermont businesses with physical locations should carry premises liability coverage as part of their CGL policy to protect against claims of injury or damage on their property. Question 26. Boat insurance. Physical damage coverage. Which of the following types of damage would be covered under a Vermont boat insurance policy's physical damage coverage? A. Collision with another boat. B. Sinking due to a mechanical failure. C. Damage from a storm while the boat is docked. D. All of the above. Answer D. All of the above. Explanation. Physical damage coverage in a boat insurance policy typically protects against various perils, including collisions, mechanical failures leading to sinking, and storm damage. This type of coverage helps repair or replace the insured vessel if it's damaged by covered events. Relevant law concept. In Vermont, boat owners can purchase physical damage coverage to protect against losses from collisions, weather events, and other unforeseen incidents. Question 27. Umbrella insurance. Coverage limits. A Vermont homeowner has personal liability coverage through their homeowner's policy but is concerned about potentially large lawsuits. How does an umbrella insurance policy provide additional protection? A. It covers damages to the home itself. B. It offers extra liability coverage above the limits of the homeowner's policy. C. It replaces the homeowner's policy entirely. D. It provides coverage for the homeowner's personal belongings. Correct answer: B. It offers extra liability coverage above the limits of the homeowner's policy. Explanation: an umbrella insurance policy provides additional liability coverage beyond the limits of a homeowner's primary insurance policies, such as homeowners or auto insurance. This extra protection is crucial in cases where the liability claim exceeds the standard policy limits, such as in lawsuits involving significant medical expenses or legal damages. A relevant law concept: Vermont homeowners can use umbrella insurance to enhance their liability protection, providing broader coverage for major claims that surpass the limits of their primary policies. Question 20. Farm insurance. Crop coverage. A Vermont farmer wants to protect their crops from weather-related damage. Which type of insurance policy should they consider? A. General liability insurance. B. Commercial property insurance. C. Crop insurance. D. Livestock insurance. Answer: C. Crop insurance. Explanation: crop insurance is designed to protect farmers from financial losses due to adverse weather conditions, pests, or other risks that could damage or destroy their crops. This specialized insurance ensures that farmers can recover some of the income lost due to unpredictable natural events. Relevant law concept: Vermont farmers can purchase crop insurance to safeguard their agricultural production against the risks posed by weather, pests, and other unforeseen factors. Question 29. Vermont life insurance. Grace periods. In Vermont, if a policyholder fails to make a life insurance premium payment on time, how long is the typical grace period before the policy is cancelled? A. 7 days. B. 15 days. C. 30 days. D. 60 days. Answer: C. 30 days. Explanation: in Vermont, most life insurance policies include a 30-day grace period during which the policyholder can pay the overdue premium without the policy being cancelled. If the premium remains unpaid after this period, the policy may lapse and coverage will end. Relevant law concept: the 30-day grace period is standard in Vermont to provide policyholders extra time to make life insurance payments without losing coverage. Question 30. Vermont renters insurance. Loss of use coverage. A Vermont tenant's apartment is damaged in a fire, making it uninhabitable. Which part of their renter's insurance policy would cover the cost of temporary housing? A. Personal property coverage. B. Liability coverage. C. Loss of use coverage. D. Medical payments coverage. Answer: C. Loss of use coverage. Explanation: loss of use coverage in a renter's insurance policy provides financial assistance for temporary housing and other living expenses when the insured's rental unit becomes uninhabitable due to a covered event, such as a fire. A relevant law concept: Vermont renters insurance policies often include loss of use coverage, which ensures tenants can afford alternative accommodations while their home is being repaired or replaced.